Hey everyone, welcome back to Upside Down Data. Today I want to talk about this rally that we're seeing in the crypto space and how high we might expect it to go. Now this is a follow-up from Joe's video yesterday where he did a great analysis talking about kind of the longer term possibility of this being more of a macro reversal and also talking about some indicators like the DXY, then also some other assets besides Bitcoin. Recommend going checking that out if you didn't see it. I'll put a link in the description. But it's also an update to a video that I had put out a little bit before then, back, a few days ago, saying that, hey, this might be something worth watching. We might be seeing a bit of a rally coming up, and sure enough, here we are. So what I want to do in this video is two things. So first, I want to give an update about some of our indicators here at the channel and what they're making of Bitcoin, as well as a couple other crypto assets in this move up, and then also talk about some additional data about different possible endpoints, that if we do see a continuation of this rally, where might we expect most to see a local top, looking at some on-chain indicators and some other technical indicators. So let's start off with some of our indicators here at the channel, give an update about what they're making of these moves by Bitcoin and a few other assets. So I'm going to start off with a market direction classifier. I'm going to start off with Bitcoin here. And, I talked about this a couple days ago in that previous video. I'll link to that one as well in the description. If you're not familiar with this indicator, basically what it does is it assesses the price action of an asset, and it creates a critical level at which it thinks the price needs to be above for it to be bullish. And if the price is below, then it would be bearish. And so, bull markets are characterized by much, much, much more green than red, whereas bear markets are characterized by much more red than green. You see that repeating throughout Bitcoin's life. And so where we are right now, and I'll zoom into the past, a year and a half or so of price data here, we just cleared above the MDC's critical level, its critical price level that it's watching. And if you're curious of what that level is, currently it's at 20,600, at 20.6K. So we're now trading currently, as I record this, at about a little over 23K. So decent amount above this critical level. And I put out a video right here where we were right here just saying, hey, pay attention to this. This is a sign that some upside movement might be coming. We closed green here, and then we've been off to the races since. So it'll be interesting to watch this, but, this is kind of a check mark that you like to see on any kind of rallies. You need to get above, the MDC critical level before you can see more notable upside. And that's what we've done here, and so that's notable. Now, I also want to talk about some other crypto assets that have been kind of leading the run a little bit more. Specifically, the asset I want to highlight and to talk about the MDC level of is Ethereum. So again, I'm just zooming in on more recent price action here. Ethereum has been one of the assets really leading the charge out of this, or at least the biggest name getting the most attention. And part of this is because the merge for ETH, if you're not familiar, Ethereum going to be transitioning to proof of stake, and it's now become semi-official of when that's going to be happening in just a few months. And so a lot of people seeing that as a very bullish event for Ethereum. So off of that kind of announcement, ETH has just been rallying like crazy. And actually, ETH being the second largest crypto, I think you could argue has really been the thing leading this rally, with Bitcoin kind of just following on its heels. The narrative really seems to be with ETH and the merge kind of pulling the market up to the degree that the narrative might be driving this trend. But, ETH cleared above its MDC level at a similar point to Bitcoin, and off to the races it's been ever since. Really nice upside, even better with ETH than we've been seeing with Bitcoin. If you're curious what the critical level is that the MDC is watching for ETH right now, it's at about $1,172. So 1.1K-ish, basically. And this is a dynamic level. You can actually see it's starting to turn up already. So this might kind of come up. And if ETH, price falls, it might come down to meet it down there. One of the things I really like about this indicator is it tends to work well for these kind of swing trades, where if you're, even in these small moves, if you buy in here, the MDC level will come up, and it'll be telling you to get out at a higher price level than where you got in. So rarely is it the case that kind of entering on the MDC will lead you to lose money if you exit at the same point. Not financial advice. I'm not, I'm not telling you to use this indicator for trading or anything, but that's just one of the things I like about it, that if one were to use it for that, it tends to work out that way. And the other thing we can note about this rally as well is that it's also been extending to assets that don't necessarily have much of a narrative driving them right now. So there are other ones that do have narratives driving them, like Matic, for example, which was chosen by Disney to be its metaverse platform. But I put out a video a couple days ago about DOT, and DOT's an asset that, regardless of what you think about it from a fundamental perspective, there's no kind of immediate narrative happening with DOT right now that should be driving price up. But, you know, what you'd like to see on a crypto rally is for it to be a broad rally. It's not just, you know, Bitcoin and Ethereum, but, you know, there's this idea of breadth. And this is also looked at a lot in financial markets, that if a rally is happening with a lot of breadth, if a lot of assets are rallying at the same time, there's oftentimes more momentum in it than if just one single asset starts going crazy with everything else not happening. Now, you could argue in the crypto space when Bitcoin rallies, it could be a different story. But with these kind of rallies here, it's notable to look and see if there is some breadth, in my opinion. And it looks like there might be some. So DOT actually just closed above its critical MDC level. Back here, you see it flipping green. And so it's very possible that you'll have some assets like Ethereum really leading the charge, maybe Bitcoin being seen as a more intermediate follower, and then you might have some of these other altcoins kind of follow even later. And so even within these small pumps, there might be some money movement that happens where people will take profits off of Ethereum, move it into Bitcoin, or move it into DOT, which could see kind of more upside later. So hard to know with assets like DOT exactly how much they'll rally, but depending on how long the rally continues with Ethereum and DOT and Bitcoin and some of those others, it's possible that some of the profits will get rolled back in some of these other ones. We don't really know yet. This could be too short of a rally for to really see that manifest, but oftentimes that's what you'll see in crypto rallies, is that in any kind of rally that's more substantial, you'll see that money flows start to happen, and then assets that haven't really moved as much earlier start to move a lot more later. So again, not financial advice, not saying to go load up on DOT expecting to go crazy. I have no idea. But it'll be notable to see if that happens. And certainly DOT's now in a position where from the MVC's perspective, more upside is quite plausible. And if you're curious with DOT, the MDC is watching $7.3 as its critical level. We're now trading reasonably above that currently, although not too far above it. So just a couple things to keep in mind there. So ETH has been kind of driving, but we're seeing a lot of assets flip their MDC level. And so that means there's some breadth happening here in this rally. It's not just one random asset going nuts. There seems to be some more strength entering into the crypto space generally, which, you know, one could argue is something that you'd like to see, especially as crypto becomes a larger asset class with individual assets having less and less importance overall. You'd like to see more strength coming to the market as a whole than just individual assets. One way that you can look at it. So let's flip back to Bitcoin. So for the rest of this video, I'm going to focus on Bitcoin because, again, I do still see it as being a barometer of kind of momentum in crypto, even though, as I was just arguing, ETH has so far been leading the charge. So another indicator that we can look at with Bitcoin and see, talk about its trend, you know, its current uptrend breaking out of this range it had been in back here. We can look at the trend confidence indicator, or TCI. So this is another trend indicator we have in the channel, but it's supposed to be more twitchy. It's supposed to be more reactive to moves and try to call trend reversals as early as possible, be a leading indicator. So the yellow here is the price action of Bitcoin. And again, I've just zoomed in so we can see what's going on more clearly. Zoomed in since the beginning of 21. And the TCI 0 is this kind of dividing line between bullishness if you're above and bearishness below. The idea is that if you're in a given trend and the TCI is red, that's bearish. That means, you know, that if you're in a downtrend, that downtrend's likely to continue. But if you've been in a downtrend, the TCI flips green like it actually did all the way back here. So even before this pump, the TCI was saying, hey, watch, keep an eye out here. There's some early brewings of a potential reversal all the way back here. That's what we ended up seeing. So actually the TCI all the way back here was flipping green. And, you know, it stayed green even in this drawdown that we saw after this kind of pump here, dumped back down here. TCI stayed green and said, hey, don't stop paying attention yet. This still is looking like a possible reversing point. And now here we are, shooting off to the upside. The TCI is actually now more confident in this uptrend. You know, that's what these kind of deeper values mean, is greater or lesser confidence in a given trend. It's now more confident in this relative uptrend than it ever was back in this kind of mini reversal towards the upside, going from the mid 30Ks up to closer to 50K back here in the early part of 2022, you know, really February through about March or April. And so that's notable. So it doesn't mean that we can't just, you know, correct and come back down, but it is notable that at least there's some strength, it seems like, coming off of this, right? We're seeing a lot of confidence on the MDC's perspective that at least this downtrend here has been breaking, or from its perspective, it has broken, that this extreme downtrend we saw has been breaking. So the TCI would be pretty surprised if we just go shooting all the way back down to another big capitulation. Not to say it couldn't happen, but that would become more surprising. You know, it's relatively confident that there's at least some upside coming here. But, you know, obviously that, and crypto, anything's can happen. We could just see the market dump right after this, you know, who knows. But from this model's perspective, it's quite pleased with what it's seeing, and that's just making it more and more confident that at least this local downtrend is showing signs of breaking, and that some upside is quite realistic from here. Okay, so that's the TCI. Now, the final piece of, oh, and if you're curious, the TCI also generates a critical value you can watch for when it would flip bearish again. And it's actually watching a level even lower than the MDC is. It's looking at 18.5K, though. If we lost that level, that's when it would say, all right, maybe we're going to restart this kind of nasty downtrend. So, you know, price would have to fall to get there, but, you know, obviously anything's possible. And I think anyone who's been following the market, you know, the idea of prices falling seems very plausible to anyone. It's just been happening so much recently. But that's just a level that it's why. And again, this is dynamic. This will change along with price, but that's where it currently is. Okay, so the final ones of our indicators I want to talk about here before switching over to some on-chain data is the upside downside potential indicator. So I'm showing you the long-term version here. This is reactive to moves that play out over months, and it's our risk indicator. So the way you read it, the higher values of the UPSI are high risk, lower values are lower risk. And you'll see that market cycle tops tend to happen, well, you know, arguably, obviously, the market cycle top over here was in November, but really the mania hype, the mania top at 64K, just slightly below here, was back in the spring of 21 where this topped out. So, you know, more or less, it does a really good job of identifying these topping out points, these kind of full-on mania bull run topping points. And then it also does a good job of identifying these low risk points, these kind of bear market, these bottoming out points for bear markets, where you tend to see kind of these generational buying opportunities before shooting out to the upside. And you'll notice that we were just in those kind of zones again. So you'll see the UPSI spends a lot of time down below -4 in those deep value zones for Bitcoin before going off back to the upside. We saw that again here, and then saw that again in 2018, you know, then moving into 2019, and then back down there again into the March 2020 crash, and we were just there again, and we just started to reverse back to the upside. And so from a risk-reward perspective, the UPSI looks at this as being very favorable. And so that's where, when we see this rally coming out of these zones, doesn't mean that we have to go back to all-time highs. And in fact, I'm going to talk in a minute about how I really don't think that this rally is going to be what's going to immediately take us to all-time highs again. But it can be these kind of nice relief rallies, right? Coming out of these deep zones where you'll see these nice movements up in price, or even if the price comes down, you start to form this kind of bottom formation where you'll see these nice moves up. Even if they get rejected, ultimately then you see more upside. And so that's kind of what we're seeing here. And it's really nice to see a reversal here because, you know, if we start seeing some strength in price, you know, it's too early for me to call the bottom. I have no idea if this is the bottom or not, but it might mean that we're getting towards the end of the bear market. In some ways, I think that's just as important as identifying kind of quote unquote the bottom. It's just knowing, generally speaking, where are you in the market cycle? Because if it is the case that we're around these points, even if we have a little bit more downside to go before we actually hit the bottom, in some ways, who cares? This could be a very favorable buying opportunity in the long run. Now, obviously, you have to condition all of that. You know, that's all dependent on the macro condition or the macro environment not deteriorating even more and really driving markets down. You know, if we see the macro conditions go horribly wrong in the stock market crash, etc., all that goes out the window again. So keep that in mind. This is kind of assuming all else being equal with the macro conditions. But that's, you know, obviously a big caveat here. But assuming that stuff, if that stuff doesn't happen, I suspect that history very well might rhyme with itself. Too early to know, but that's what we're looking at here. So that's the long term. I also want to show the medium and the short term just to give those perspectives. So the medium term is reactive to moves that play out over weeks to months, so a little bit shorter in its time horizon than the long term. And again, we're seeing a reversal out of these deep low zones. So we're telling a similar story here. And then the short-term UPSI, which cares about moves that play over days to weeks, so even shorter, is showing the strongest reaction to this move, where it's now moving decisively back to the upside after coming down below -4, which tends to be these kind of extreme capitulation bottoming points in the asset. We're now shooting back up, which is what you tend to see off of those points. Now, if we look at it just from a historical perspective, right, you know, we're shooting off, we're up a bit below or above -2 right now. In bear markets, you know, you can move beyond that, but oftentimes this can act as resistance. We saw that back here, kind of a little bit above -2 rejected down, bit above -2 rejected down, bit above -2, or in this case actually -1 rejected down. And so, you know, if we start charting our course on the short-term UPSI up towards 0 and beyond, I start to get a lot more cautious. Really, the only time that we've seen one of those kind of first move out of these deep levels that's gone well above that is really back here, coming out of the 2018 lows going into 2019. And, you know, I personally don't see another 2019 move right out of here being all that likely. But, you know, obviously it could happen. But certainly if we got up to those levels again, that's where I start getting cautious personally. You know, just historically speaking, you usually can't really get much above those points for getting pullbacks before being able to move back up, assuming you're starting a next bull run. And again, I'm not even convinced we're about to start a next bull run, right? I think that it's very possible we're just going to see something like this play out, or it's even possible that we're going to see something play out where we have to end up put in a slightly lower low before going back up. So I'd be really surprised to see us move up. But just if we're looking at a target for when we might think that this rally is getting overheated, you know, we're getting towards that level already where, you know, some pullback might be reasonable, especially if we start getting closer to -1. But if we get up to 0 or +1, that's where I really start to get alarmed. So far, I don't think we necessarily have to see a pullback here, but certainly as we cut up through, I'll get more and more pessimistic of the long-term kind of continuation of this current rally that we're seeing. And really, I also say that because there are other indicators we can look at that also would tell a similar story. So it's not just the short-term UPSI that's giving that perspective. Let's look at the volume profile for Bitcoin over the past couple months. So I want to really look at where the volume has transacted really ever since kind of the May capitulation moving into here. And what we can see is that, you know, obviously there was a decent amount of volume that transacted in this capitulation, but there's also a notable amount of volume that happened at around 30K, right? We can see that the next kind of big bar here, the next big amount of volume that transpired at a given price level was at around the 30K range. And so I think a very reasonable price target, if we see a continuation of this rally off of current levels, is moving back up to 30K. Because again, not a whole lot of volume transpired all through here. We sliced back down through these levels so quickly. Not a lot of volume transpired, so there's probably not that many people who have their cost bases here. So they might not, there's fewer people who are kind of going to be coming back to their cost bases who might be motivated to sell at break even at these levels, or we might start seeing that again more heavily at 30K. And we can also just see this literally on chain. So that was just kind of at trading volume. Here we can just look at where do coins have their cost bases on chain. And so that's what realized price means. It's just when were assets traded hands. The idea is someone spent at that price, and then therefore the person who acquired at that price, that would become their cost basis. So this is, you can read this as the distribution of cost basis at different price levels for Bitcoin. Now I've excluded people who are buying, you know, acquiring in the last day, really within the last month, because that's so short term, it's kind of hard to know how meaningful those are. You know, some of those people are going to be people who are buying for the long term, some people aren't. I'm just going to start with a month and then go on. And what we can see is that the next kind of big shoot up in volume, you know, we're already cleared beyond 23K, which is kind of this next big high bar here. A few more coins kind of up to 24K. But really the next place we start seeing any noticeable amount of coins is at 27K, and then really again at around 30K. This is kind of the place where especially a lot of these shorter term holders, you know, these 1 month, 3 month people hold their coins at 30K. And we know that short-term holders, you know, people who are under around 155, 140 days thereabouts, they tend to be more likely to spend. So that's where I really expect, you know, these people here at 27K, they're in the 1 to 2 year cohort. They're not nearly as likely to just sell at their cost basis as people who are in these shorter term cohorts. So that's again why I'd expect 30K to act as strong resistance that we've seen a lot of short-term holders get their cost basis here. They endured a lot of pain, you know, 50% to the downside as we move down below 20K. If price comes back to their cost basis, I think an awful lot of them are going to be tempted to just get out at their cost basis, cut their losses, or, you know, break even and not risk, you know, riding the asset all the way back down again. So, you know, if this rally continues from where we see it right now, I would personally be getting very pessimistic of it continuing past 30K. I think we very likely bump our head at 30K, get rejected down. Now, the thing that we'd want to look for if that did happen, so let's say that we did move up to, you know, around, I'll just put a line here at kind of the bottom of this range around here. Let's say that price does, you know, kind of generally move its way up here. What we want to look for then after that is price probably falling, but as long as we put in a higher low somewhere, that's ultimately starting to build a bullish structure that might then end up moving into something that could then move back up to the upside. Now, this is just drawing lines on the chart. I have no idea. This is not a prediction. But if you saw price action start to unfold that way, that would actually be a bullish development, even if we saw price fall from 30K all the way back down to closer to 20K. As long as we can put in a higher low, that would be potentially a bullish development. So my overall take on this current rally as we see it right now is that so far so good, right? We've seen the flips that we needed to see to have some hope for a long-term bullish reversal, right? We've seen the MDC flip bullish. It's done that. Great. Now, historically, that has made moves to the upside quite a bit more plausible. We've seen the TCI flip bullish. Again, great. That's a thing that happens at those reversal points that can lead to some some notable upside. Great. The UDPI is generally speaking at very low levels, which means there's quite a bit more upside and downside potential that's realistic. We're really coming off of those deep levels, the -4 to -5 levels that tend to kind of mark these bottoming points. But that being said, when you're at those extreme bottoming points, it's almost never the case that you just go rip off to all-time highs. Again, really the only time that's ever happened for Bitcoin was this move all the way at the beginning, where we went down to those really low UDPI levels back here, coming off of the very first kind of pump in 2011. And that kind of, for the most part, was up only ever since here. And technically, UDPI stayed in those deep value zones even all the way through here. That was really one of the only times we ever ripped to all-time highs coming off of that deep of UDPI level. Every other time since, you'll have kind of these moves and then sell off and then going back up, or these moves. Ultimately, the 2019 was very impressive, but then we came all the way back down in the March 2020 crash before going up to an all-time high. And so that's where, again, my base case would be that, should we see notable upside, a similar thing will happen, where however far we get up to the upside with this rally, I think there's going to be a dip that's going to follow, and, it's just a matter of how high we get and then how high that dip ends up being. And so I think when people are thinking about how to navigate this, certainly just from the long-term perspective, if we think that the bottom is close, even if it's not necessarily in yet, as Joe was saying yesterday, I agree that this could very well just be a big accumulation zone that's very favorable from a long-term risk-reward perspective. And so really kind of when thinking about, how to navigate this, the one thing I think that anyone hopefully learned from these previous market movements is that FOMOing almost never works out well. That just going all in because you see price starting to move up and you're worried you're going to miss it almost never works out well, because more than likely than not, or oftentimes what will happen, price will come back down and, meet you or actually fall below where you bought in. And, all that panic, all that kind of FOMOing, it didn't really mean a whole lot, or wasn't really all that worth it. So for me personally, again, not financial advice, I'm not FOMOing here. I have a plan. I have a goal, a way that I'm navigating this, that I'm not just going to modify because I see price starting to pump after all this downside. And again, the likelihood of this just moving off to all-time highs is so low that I think there's going to be plenty of chances to accumulate later, even if this is a macro reversal. We're going to have to wait and see. And then the final point that I still think bears mentioning is that caution is obviously still, I think, very prudent given the uncertainty in the macro setting, right? Because really for all this to play out the way I've been talking, I've been assuming that macro isn't just going to go and stab its dagger into the back of Bitcoin again. That's not just going to lead to another one of these. And, macro absolutely could do that. We have no idea, right? We don't know if the stock market's going to collapse, if earnings are going to fall off a cliff that's going to lead to a huge sell-off. We have no idea if inflation is just going to run even higher, if the dollar is going to start rallying again to crazy highs, or if oil is going to start going ballistic. No one knows. And so that's where I think whenever you're making these decisions, it's important not just to look at these things that are looking at crypto or looking at Bitcoin, these indicators, also just take a moment to think about the macro context and where you think the market's going to go. Because certainly if you think that the macro environment's going to deteriorate massively, that really kind of calls into question whether or not crypto is as solid of an investment right now, even though we're starting to see at least a little bit of strength, and these kind of indicators that have historically called bottoms have been flashing quite heavily. So just something to keep in mind. But overall with this rally, so far so good. If we get up to around 30K, I'll become a lot more pessimistic. Or if before that happens, we see the price level fall back below the MDC level, however high that gets up to by the time the reversal happens. And then certainly if we fall below the TCI level, I'd be getting bearish as well. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates about indicators and more over there.